Good morning, everybody. Good afternoon. Thank you so much for joining us today. Welcome back to our Home Express webinar series. Today is DSCR Uncovered. As always, I'm going to read our disclaimer. The content of this presentation is proprietary and confidential information of Home Express Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of Home Express Mortgage Corp, and we thank you for your support. This looks like a long agenda, but don't worry, we're going to get to everything and it'll be very, very informative. So thanks for staying with us today. We're going to uncover DSCR for you. As always, I'd like to welcome and thank our presenters for joining us today. Again, my name is Andrea Formato. I'm the Sales Training Manager here at Home Express. We have Mr. David Grider on, who's our SVP of Wholesale Lending, and we've got Ray Menina on, who's our SVP of Strategic Initiatives. So Ray, I'll turn it over to you to say some welcoming words.
Yes, thank you, Andrea, and welcome everyone. Welcome to our monthly webinar series. These webinars are geared towards providing you relevant market updates, as well as product information that can help you capture more business. About us, Home Express started in 2015 as a specialized non-QM wholesale lender dedicated to serving mortgage brokers. The company was founded by seasoned executives who truly understand non-traditional lending and are committed to serving borrowers who may have unique situations that prevent them from qualifying for traditional loans. We've evolved into one of the top non-QM lenders nationwide due to our make sense underwriting approach, our industry-leading pull-through ratio, and our focus on speed, ease, and convenience. Today, our presenter is David Grider, who is our SVP of Wholesale Lending. He'll walk you through some of the unique characteristics of non-QM loans, and more importantly, DSCR Uncovered. So this is going to be one of those behind the scenes, behind the curtains type of webinars where you're going to learn more specifics about DSCRs. Without further ado, David Grider.
Hey, thank you, Ray. I also like to comment about seasoned, right? That means I've been doing this a long time and I'm a little bit old. Right? So thank you, Ray, for that. To kind of start out here is like, there's a lot of webinars. I've seen a lot of information coming out and to the mortgage community, which is all good. And before I go into DSCR, I want to kind of hit on those as we go into a more product-based type of webinar. But one of them came up, well, what does recession mean for the real estate and mortgage market? And we all kind of realize that demand, it's been affected by the rising rates, right? But how you navigate that, and this is why this product is really a good one to cover today. Also, another one is solutions for borrowers, right? Yeah, absolutely. We had a webinar last month by Greg Fairman, our Vice President of the West Division, need-based, right? Because we all know, and I've been through cycles, because as Ray said, I'm seasoned, where rates go up, they go down. We still lend. There's still borrowers out there that need a home for their family by purchasing a new home, or cash out for whatever reason, or diversifying their portfolio, which is more towards this. When's the next refinance market? Man, I was looking for my crystal ball. I can't find it. However, we know historically the loans you do today and the rates are creeping up, even on conforming 7%. Non-QM's probably in the 8 range or 8.5 range today. That they're going to probably be refinanced in the form. So every loan you do today, as a consultant out there for the borrowers, you can get the next loan. Other one is this a housing crash, right? And I figured I would just talk about this a little bit. We're unusual market today versus 2008-9, where historic equity has been built up with the home values. Job market's still pretty decent, right? And the income levels are there, right? So even though we're going to have some segments, and I'm not saying it's going to stay where it's at in your areas or overall, but might have some tailback and more so in certain areas that might have had a bigger increase than other areas. But as we're navigating this mortgage market, there's products that have come out from the non-QM, and one is DSCR. And I go back, because I've been in non-QM really when it came back, early 2015, of looking at these products of helping borrowers in underserved served markets. And this is one. Why did DSCR start, right? It didn't just always be there, but if you own more than 10 finance properties, or you had to do all these Schedule E's with a bunch of write-offs, you didn't fit the conforming world, right? And so where do these borrowers go that still want to invest in real estate, understood kind of some of the benefits of having investment products go? They went to private money, which was higher rates, paid points, had balloon payments, all these things. And so this product came out to help serve a lot of borrowers that were kind of taken out of the market. If they had to go financing, the cost was very tremendous. So with that, I'm going to start out kind of what is DSCR and go through some of the benefits of that as we go. DSCR just stands for debt service coverage ratio. So that's where we're taking this particular transaction into more of a business purpose type of look, on a kind of more quasi-commercial, and saying what on this property, what is the cash flow, and what will that net profit be based on the rents versus the total mortgage payment, right? And this is not an income loan. There's no DTI calculated. It doesn't go through that format. It's just looking at this property and the cash flow of it. Very similar to a lot of commercial stuff, even though this is for the residential sector. All right, so we'll go to the next slide and go a little bit deeper into DSCR. Here's a little calculation, gets us there, and I kind of put two on there, right? So how is it calculated? PITIA, which is principal, interest, taxes, interest, association dues, right? Or just drop the P off and interest, taxes, insurance, and association dues, because you can qualify off the interest only payment. As far as Home Express interest only, that's 10 years. And so you can qualify and see where that would be. So they actually get a lower payment, get higher cash flow. And these are just some examples for you on a PITI or interest if you drop it off P for that. So if it's positive, meaning your rent is covering your house, the subject mortgage payment, that's a positive. That means you got positive cash flow. And historically, if you looked at delinquency, and I've done a lot of roles in this mortgage industry, if you have a property that's cash flowing or have a lot of vested interest, looking at maybe the appreciation of it, those type of things, those mortgage payments pay very well, right, and have a real good track record. Then I put down here below some of the minimum DSCR qualifications, and it really has to do with FICO, LTVs, and more of a risk base. So if you're greater than 1, there's programs up to 80% LTV on a purchase with a 700 FICO. Less than 1, it's capped at a more vested interest at 70 with the minimum FICO to get in at 640. So just kind of give you some of the qualification. I put less than 1 because we have programs where it can be less than 0.75 for those transactions. So we'll go to the next slide and kind of go a little bit further here on qualifying criteria. On a purchase, again, this is a new landlord's going to own this property, right? So we would require the 1007, and we'd go off the schedule rents on the SFR, condo, those type of things, right? So we just go with what the average rents are, and I'm going to give you some helpful tools down below how to look at that. If it's units, you get a 1025. The good news on here, I'm not putting a 216, which is your income and expense statement with that, which is not required at Home Express. Now, if you do it 5 to 8 units, which we have that as a DSCR as well, it's a little more on a commercial aspect, even though we can still do it in segments of how we do business in a residential. ERCAR is a 1050, and if you've got a 5 to 8 unit, just consult with the AE. It's going to be a little bit more information that you'd need on doing a 5 to 8 unit DSCR. However, on a refinance, you can use either the actual rents or what's on the 1007 or 1025, right? So that's a good thing. And the reason you have that on there is historically, just looking back, going back a year and a half, rents have increased in some areas 25, 30, 40%. And if your appraiser's going out there and appraising them, you order it, hey, I need a 1004, 1007, and they go out there and hey, I need the 1007 filled out. They're going to an MLS data that may be 6 months old or maybe not updated. So it's very important as you're ordering these appraisals to help out the appraiser get what the current rents are, right? And so you can get that through a lot of different sites, right? There's lots of ones, Zillow Rents or those rent.com to look at it. But we have a little tool on here on a part of our portal that's available to you on X Connect, that you can put in the subject property address and it's going to pull comps for you in that area. So you have an idea of what that estimated rents will be up front. And then you can provide that information to the appraiser as you're doing the orders. Hey, here's some comps for you so you can look at it. So that's some very helpful tools for you that are available as an approved broker with us. So the property types, I want to go with this is kind of just go, we've talked a little bit about SFR units, right? The units 2 to 4, units 5 to 8, so more on the commercial side. We're going to go more of the property conditions, right? Now, when I get asked these questions all the time, hey, what about the zoning? What about this or that? But the fact of the matter is you're really going to have to look at, is it a marketable property and is it legal? Once you get those two things down, most of those properties, if they're marketable and legal, qualify, right? So, you know, again, the condition needs to be minimum average, urban or suburban, no rule. Now, why no rule? Are they marketable? Well, when you go to really rural, or actually I call more remote, you have less tenants that could be in that particular property. So it is a little bit more on the less marketable side, and that's why it's done. The good news at Home Express is that we underwrite to our own conditions. I mean, yeah, there are our own conditions, our own money we fund with. So we're able to call it what it is, no matter what the appraisal says, right? So for instance, you'll have some areas, let's say just outside of Sacramento, right? Where the appraiser has to check one or three things, urban, suburban, or rural. They check it rural, but man, it's just really a suburb of Sacramento. You don't have to have the appraiser change that. We will actually look at that as a suburban property using just our own common sense. And again, I'm going through these types. It's more of a buy and hold type of transaction, not a fix and flip when I'm going through this DSCR. There are some fix and flip programs. Those are typically the ones where you buy it, it needs a lot of work or that, and you turn around and sell it in 3 to 6 months after you fix it up. So most of ours are more of a long-term. We do have some no prepay options, 1, 2 year, and this is your consulting you do with your borrower, right? Because we know rates will probably come down. It goes in cycles. How long are they going to hold it? We can match you up with the right program, right prepayment penalty to make sure you're consulting on that and looking forward for that next loan. Okay, borrower qualifications. Let's take a look at that, right? The first thing we look at is, you know, is this truly a rental property and a business purpose, right? So we put some kind of guidelines on that, and it's hard when we can make common sense decisions, but some of the ones are, do you own a primary residence, right? It's not really for the first time home buyer that rents somewhere and they're buying their first investment property 5 miles away. Those are probably problematic. So when you look at it, do they own a primary residence, right? It really goes in, it's clearly going to be an investment property, right? Now there's cases where some of these investors have made the decision, I think it's cheaper for me to rent and put more of my resource into rental. So they have several rentals, so they're experienced investors, that's fine too. And again, we're just trying to ascertain that it looks clearly that this is going to be a non-owner occupied property. Our minimum FICO score to get in is 640. Mortgage history right here, 1 by 30 by 12 with a 700 score. If it's less than 700, last 12 months, 0 by 30, or 48 months on the life events. That's your BK foreclosures. Reserves, 6 months required for greater than 65 LTV. You can use cash out for reserves except for the 5 to 8 units. Good news here, the citizenship, we cover almost everything, including foreign nationals. So we have programs for foreign nationals. So it covers a lot. So there's a lot of borrowers out there you can get. I actually had marketing to kind of do a slide for you because business purpose, you don't have to be licensed in particular states for you to originate them, right? I was looking at some of the loans we received last week, and I was looking at this one broker, and I just looking at it going, why are we getting loans in this state? And it was a broker in Denver, Colorado, and we got like 3 or 4 loans under DSCR in Texas. And this broker is not licensed in Texas. Well, it's because we're paying the registration. Our company registered in these states for business purpose, and you're allowed to originate those loans on a business purpose DSCR in those states. And the ones that are in black are there. Now, we don't do any loans in New York, even though that's there, but even though it's on there. But the ones in black, you could be not licensed in that state and able to do those transactions. So you can see where this can, get you more business and more borrowers qualified. You could have clients in California say, I want to diversify my portfolio, but the rents are better and I can get better cash flow in New Mexico or Albuquerque or someplace in Florida, Georgia. They're able to originate those loans through us. And we'll go to the next one here, some of the benefits. We kind of talked about this a little bit, right, through our conversation here. Diversify investment portfolio, right? Now, typically, investment portfolio, you got stocks, bonds, some type of cash, but also real estate. And there's a lot of people understand that, that it should be kind of diversified. And this is one area where a lot of borrowers have looked at, hey, how do I hedge against different things? And one thing would be real estate. Over time, it generally goes up 3% to 3% per year, even though it goes up and down. And also they can get into a property that's the tenant's paying the mortgage payment. And so that's getting some equity built in down the road, right? Other benefits, we have loan programs available to borrowers that don't fit the conforming market, right? Even if they went full doc, they own too many properties, too many financed, right? This is a program they can do. Wealth legacy strategy for many individuals, right? That they can pass on to other family members or those type of things as they go on. Passive income as they hit retirement age or sooner, right? They have not only their Social Security, their 401k, retirement, pension, but they come into that, right? And again, this is additional loan programs for you and for your real estate agents, right? So let them know that you have loans for these individuals or borrowers or these small to medium investors, I call them, that we can get these loans done. You can do it quick. They're fast closing since they're non-TRID, right? It's really just based on the credit profile of that borrower and the cash flow of the property, and they have to have 20 to 25% down, and then you got a loan. So it can close really fast. Simplified conditions, right? And through time, we've analyzed these loans over the past, 7 years, 8 years that we've been doing non-QM, and we kind of streamline them for you, right? So the first one I'm gonna go over with you on a streamline is credit mortgage history. So we're always gonna look at the primary housing and the subject housing that's a refinance, right? And whatever's on the credit report. We do know that there's a lot of investors that might have five mortgages with private lenders, right? And then you're looking at this loan, go, man, I'm gonna have to get a whole bunch of canceled checks, copy of the note. No, you don't. That's all we're gonna look at is the primary subject and the items on the credit report and the mortgage histories on those. We do a fraud guard check for any major events on all the properties that they own. So once that's cleared, we have a good feeling on it. We're able to move that and make the conditions more streamlined for you. Don't necessarily need lease agreements for this. That's up to you and the borrower based on maybe the actual rents on refinance are better than what the rent schedule has. So, but all you need is the 1007 and SFR 1025 as units. We'll go off that. And no need for the 216 either. So kind of streamline where you're really cutting down on the paperwork that you would actually require most borrowers on most loans, right? And again, this is a business purpose loan that's based on the cash flow of the property, credit profile of the borrower, so no income's used, right? Personal income. So the tax returns, no Schedule E's, not going through all that. And lastly, I put on here, we probably have some other ones, but these are probably the main ones. Funds to close, 30-day seasoning. That's it, right? So 30-day source and seasoning on the funds to close. We allow gift funds with a minimum 10% owned funds into the transaction. So you can see where this can make it really seamless for you and maybe real estate agents to close more loans. As we know, the demand with the higher interest rates is affecting some less applications in the mortgage field. So again, I'm going to give you highlights and then we'll take your questions. And please, as you're going through this, please put questions in the chat box so I can answer any question you have. And it doesn't have to necessarily be on DSCR. It could be on the non-QM industry, anything that you might want to see here. And again, I looked at highlights a lot. I'm just going to go through a few of them here. No income documentation needs, not that. Pricing's based on the DSCR FICO. We have 80% LTV available. Don't need lease agreements. Qualify off the interest only payment, right? No DSCR to 70 LTV. Unlimited properties owned. We can do up to 10 loans with the same borrower. Non-trade, close fast. Dual comp software on this since it's business purpose, right? You can earn up to 5 points. Foreign national is available. We have the ability to finance, discount, and broker points to help you out on the funds to close, and probably lower the rate without having have to come with more money. We have no prepay options and 1 to 5 years available, given the circumstances of your borrower. So with that, I think we kind of wrapped it up here in about 15, 20 minutes. And I'd love to take some questions that we have here, Andrea.
Yes, absolutely, David. Thank you so much. We do have some questions. Let me go get some of them. The first one that came in, if you get a 1007 that is lower than what you are charging for rent, which one will be used?
It's a great question. If it's a purchase, right, again, because our borrowers are not, don't own the property, haven't managed it, we're going to have to use the rent survey off the 1007. But a refinance, I can use the actual rents that they're receiving. So we'd ask for a lease agreement, 2 months proof of receipt, and we'll use the actual rents to calculate that DSCR percentage.
Great, thank you. The next one, what is the highest LTV for non-owner occupied investment?
80% on a purchase.
Okay. Business purpose loans, the state map, David. If they're in black states, do they have to have a license somewhere?
No, you do not have to have you do not have to have a license at all. Like we have many, I guess you call them CPAs, maybe law firms that are signed up with a strictly for business purpose DSCR. So you, in fact, do not even need to be licensed to do business purpose. We do require some type of business entity, and you still go through a small approval process with us to get approved and have access to the portal, all these different things. But no, you don't have to. Most of our broker community and those that are approved with us utilize this to kind of expand on their particular markets to capture more loans. Maybe they'll market for that. Hey, we can get you investment properties in Texas, state of Washington, Florida, and some of these markets where rents have really gone up. They might want to get into that. And so they use that, even though there might be just licensed in one state, they use it for that. But no, you do not necessarily have to have a state license at all, any state, to do business purpose in states that's not required.
Thank you, David. Next question. Can you do DSCR below $100,000?
It would be case by case. The answer to that typically is no. And again, there's probably not a lot out there, but probably certain areas they are. And again, there's might be an equity concerns, like even if you put 20, 25% down, I mean, at a $100,000 home price may not be there. But on a case by case, we could probably look in the 90, 95 range, but not too much on exceptions underneath the $100,000 on a loan amount.
Great, thank you. Here comes a very popular topic, David, that we've been talking about recently, short-term rental DSCRs. How do you determine income?
Excellent. Now, good. We knew this was going to come up, right? So I'm glad you asked that. So I was going to have to address it here at the end. Right now, we qualify off of long-term rents on a DSCR. We can look at some type of bank statement program or some type of alternative income docs to look at short-term rentals they've been receiving, but that requires 12 months history, right? So you have the cycles of, you know, a lot of short-term rentals have peaks and valleys, right? So like Lake Tahoe is probably going to be heavier in the winter than the summer as far as the income. So you need a 12-month history, and we will look at that on an income or alternative income basis, but not on the DSCR. But keep in mind, on the DSCR, we're qualifying for long-term rents. We have that program with lower than 1, in fact, 0 DSCR. So there are loan programs that can fit in, even though we're qualifying off of long-term rents.
Great, thank you. A couple more, David. This one is how much money down?
Well, you're gonna need on a purchase at least 20% down, right? And then you can work out the closing cost. I don't know if you got 2-3% seller credits or those types of things, but it's usually 20% plus some type of closing cost that you need down on a purchase, and that's for a DSCR of 1 or better.
Great, thank you. Please explain no DSCR for less than 70 LTV.
Yeah, what it means, there's really no such thing as a no DSCR. I kind of put it in there, but just so you know you'd be qualified, right? So, for example, I have a borrower that owns a lot of properties in Silicon Valley, and they want to buy a property for depreciation or for tax advantage, a 3-bedroom, 2-bath house in Menlo Park, right? That's going to be $2.5 million. So, and then you look at the payment on that versus rent. The rent might only rent for $6,000 or $7,000 a month, so it is going to be less than maybe 0.75. But you look at it's clearly a rental. Their primary is worth 8 to 10 million. They just want to diversify some of the assets they have. So your DSCR is at a lower level than is typically looked at as an investment property. So again, you're going to get a long-term rent. So there's no such thing as 0. It's just that we have options for those borrowers that have that circumstance.
Great, thank you. Next question. Can you give an example of pricing?
Yeah, I think you can. I mean, I don't have the rate sheet up here. I can't share it with you, but you start out with your floor, then you kind of look at if it's at 1, you have no ad. If you're below 1, you have a small ad, and if you're below 0.85, there's another ad, and it's based on that FICO, LTV, and then prepayment. We've had a lot that say, I'll take a higher prepayment penalty to get a lower rate. Or maybe they want a 1-year prepay knowing that they want a higher rate. And again, it's more risk-based pricing on that. But if you go to our website, the homeexpressmortgage.com, we're forward-facing. You can bring down that rate sheet. You can ask questions. You can ask for a scenario on there, and we can have one of our AEs contact you. And at the end of here, I'm going to give you my contact information on the next slide, and you can email me directly.
Great, thank you, David. Next question. Do they have to have past landlord experience?
Great question. And I think that the thing is not necessarily, but we got to clearly tell this is an investment property, right? So yeah, as long as they own a primary, right, and we can clearly tell this is investment property, okay, and that's really kind of the test of it, right? Is that you can clearly get. If someone has a smaller home, they want to buy a bigger house, 5 miles away from where they work and live, I mean, that might be problematic, but hey, they want to get into investment properties for the rents, and it can clearly tell us it's gonna be investment property, they own the primary. That's fine. We could look at that transaction.
Great, thank you. Next question. What about refi LTV max?
75.
Great. Here, this is a good one. Strategies for getting more clients for this product in multiple states.
Absolutely, right? And again, this is out towards like for yourself as a mortgage professional out here in consulting. I always say go to your base, right? Go to your base. We're able to do these loans. You're able to do those in states. How many of them have relatives that probably don't even know about this program, right? That might live in other states. I mean, I got relatives in the state of Washington, I mean, Virginia, all over the place, right? And I kind of start there. Then you talk to your real estate agents. Maybe you join groups at different states, right, that are out there in the social media aspect. You can do loans. You can join groups where, landlords, that kind of stuff, or property management companies in those states. Let them know, hey, I have access to these type of loans for your landlords here that have tenants. They can get cash out. right? And I'll put this on the thing. So it's really just making yourself available, whether the marketing is by flyers or whatever you have or social media. It's about making yourself available out there that let people know you have this product available. Cash out. I want to talk a little bit about this. It's like, I look at it from this standpoint. We're all kind of seeing where values in certain areas are kind of declining a little bit, and maybe more so in areas like Boise, Vegas, that kind of stuff. If someone was thinking about a refinance, might have a need for cash in the next 90 days, when would be the most advantageous? When their values are probably the best at, right? Because if it goes down 5%, just say $1 million property, that's $50,000, right? Of less equity or less cash out. So when you're going through this and you're doing a consulting with the borrowers, and they may have a need for that, maybe they need to pay for college tuition come up this spring, when would be the most opportune time? I'm saying, just be consulted. I just think, given the position now, sometimes it's better to go now, and that rates will come back down and refinance. And this is true with investors that may want to, hey, I need cash out because I feel values might come down in certain areas, and I have a unique opportunity to buy real estate where I think it might be discounted more than it will be coming up. And so maybe they want $200,000-300,000 now for the opportunity to buy some investment properties in the next 6-8 months. Probably not a bad strategy, right? I mean, it's about planting the seeds, a need base. So if they wait that 6 to 12 months, and maybe they're in an area they want to refinance this investment property, they've gone down 5 to 10%. I might cut back on their cash out they're available to. So I'm just saying this out there, kind of be consultant, work on this with some real estate agents. Your current base I always go to, kind of see where they moved. Maybe have people move out. Maybe there are a lot of people exited some of the urban areas to suburban areas or out of state. Might be in that state where you're able to help them out. Maybe they know other people. Social media, join some type of groups in social media and let them know that you have these programs available.
Great, thank you, David. Next question, do you need to be a homeowner for over 1 year?
Yeah, generally, yes. I mean, again, you're looking at what is clearly investment property and does the deal make sense? We're a common sense lender. Do they have to be a property owner for greater than 1 year? There might be a case where I'd say no. I think overall, you just got to look at it. Does this make sense? And again, we don't want to put anybody in a bad position. If you're a new property owner and you really haven't had the experience of that and maintenance of it, some of the cost of it, might be challenging for them. So just know, but there's others that might have that ability to do that. So I'm not going to box into one transaction. We're going to look at each loan for its own merits. And so that's something we'd take a look at, right? Maybe they have a lot of reserves somewhere else. Maybe there's something here that we could take a look at.
Great, thanks, David. This is a scenario, they're saying that they did a DSCR with another lender and it was a cash out refinance. Borrower needed to have a tenant and lease agreement before they close. So is that the same with us?
Again, it's tough to do refinances on vacant properties, right? If you know kind of the historic of most homes need to have somebody in it, or so you might have the risk of vandalism, squatters, those type of things and activities historically. So on a refinance, you would need to have it occupied, and that is not a bad condition. We'd probably have the same one if it's a refinance of a vacant property, and there could be good reasons for it, right? They rehabbed it, right? Tenant moved out, I'm going to rehab it to get market rents. Great reason. But we would need the lease agreement and proof of EMD to fund that loan. We can underwrite it and waiting for that to happen. It's marketed. We understand that, but we would need that before we funded the transaction.
Great, thank you. Next one. Where can I find your slides after the webinar to review?
I think we're going to send to everybody that register, if I'm not mistaken, Andrea.
We sure are. We sure are. As well, we have a webinar library on our Home Express website that everybody can go to. But yes, we will be sending this out after the call. Next question, David. Does the borrower need to live in the state where they are buying the property on the DSCR loan?
No, that's why I brought that state map up, right? I get those questions. Now, I mean, then just kind of make sure you're being a consultant with this borrower, right? It is, what if I live in California and I'm going to have an investment property in Florida. That is perfectly fine, right? Absolutely. However, please do the right thing and say, hey, what does that take? Do you have a property manager? You know the tenants. How are you going to manage that? Because you don't want to do a loan to have someone struggle with it, right? Just make sure they have a plan for that. But this is, I've seen a lot of borrowers do that. They go to certain areas, they think appreciation will still be there or will stay flat, and they can get a tenant in there and cover that mortgage payment and part of their investment strategy for the future, for that passive income, all those type of things that can happen, right? So no, I mean, that's perfectly fine. You don't have to live in that. I'm just going from the side of, because I believe we as an industry need to take care of borrowers and do the right thing. Make sure they're aware of everything there. Maybe on that transaction, it's better to have a property manager or what is their plan in case something happens on it so that can go out to the property right away.
Great, thank you. Next question. If my client just bought a property by cash, how soon can he refi cash out with DSCR?
Send it to us right after the fact, right? So it's just delayed financing, right? So that's all that is. So you bought it cash, which is great. Well, a lot of people did that over the last 12 months and they want to get their cash back, right? So that is fine. You can do it right away. We're just going to use the acquisition value, right? Or the lesser the acquisition or appraised value, whatever the case may be, for that delayed financing transaction. So next day, if they bought it, here it is, something I want to get my cash in a couple of weeks, that's fine. Then we need to refinance, appraisal, those type of things.
Okay, great. Here's the next question. If we are licensed with a broker in Nevada and we find a loan in Texas, who gets paid?
That is available to you, right? So I'm not going to get into who splits the fees. That's up to you and the broker, but you can have co-brokership on these type of business purpose loans. We just know the one submitting it had to have a license. If you're in the state of Nevada doing a DSCR in Nevada, that individual needs to be licensed in Nevada. Texas is not, but if you want dual compensation and splitting commissions, just let us know up front what it is. Get with your account executive. That is available.
Okay, great. This is a little bit of a scenario. So let's go to this next one. If it's a purchase and the previous seller was doing Airbnb, the new owner who just purchased the property will be renting it out for Airbnb as well. Can we use the Airbnb income from the ledger?
Okay, right now our rules say no because they did not own it for the last 12 months and do anything like that. We'd have to qualify it off the long-term rents as far as the DSCR percentage. We're not saying we're not going to do the transaction. We're just going to qualify it on the long-term rents. And again, there's some other company, I've seen some rules regarding that where that's available. And again, you probably get a better rate, that kind of stuff with the DSCR falls below 1. But right now we're using the long-term rents on a purchase. This is a new individual buying it and it plans on renting it out Airbnb, which I get, but then you have to license it, put their name in that, and they might rent it out differently than the current owner that's selling it. So really, do you really know what that income from the short-term rental is going to be to apply the DSCR? So we've taken a stance. We understand that. We kind of believe that they're going to probably rent it out Airbnb or sometime a short-term rental. We're just going to qualify them off the long-term rents on that purchase.
Great, thanks, David. I think this next question is kind of a follow-up to the other question previously about the loan minimum amount under $100,000. And she's saying it's less than $100,000 in Oklahoma.
And again, I mean, we'll take a look at that, less than 100. I mean, those are very hard to do. And again, we'll take a look at that for you. I mean, the loan amount's 100,000. I'm more interested in say, what's the hard equity position in the property? Is our loan amount way under 100? Probably no way. If it's a 95, they're putting $50,000 down. It's a $150,000 purchase, putting $60,000 down. Probably okay. Just need to get more details on that. So if you could send me your scenario at the end of this, would be great. I'll be able to answer that for you more clearly.
Great, thanks, David. Next question. Can you do assisted living DSCR?
Great question. And the answer to that is we have taken the stance is no, not right now. We're not going to take, the risk, I guess what I call a reputational risk. some type of care homes right now on the DSCR. And so that's one element on the properties, types that we're not doing. If they're being used for, some type of care facility or adult or whatever it is, those are things that are more business oriented. And typically when you look at those, there's some type of things they've done to the property structure itself to make it for some adult living. They expand the room count, more bathrooms and all these different things. And we have to look at it more in a residential standpoint of how it is. So we just made a stance, so let's not look into those right now.
Great. Here's another scenario. So if a client owns a home in Arizona and they're renting it out, but they live in Texas, they're working and renting there, can we do a cash out refi for the Arizona property under the DSCR?
I think you have a good shot at that, right? And again, this is just there, and I always say yes or no. It's tough just looking at, but I can really demonstrate and prove that this is clearly a rental. They live and work in a different town. They have this rental, right? Absolutely. They're renting it out to whatever tenants, and we can prove that, right? I think you have a good shot at that if they've been doing that historically, right? So, hey, I think you have a great shot at that one.
This might be corresponding to the previous question. What if the property is being used as an Airbnb?
And again, we're going to have to make sure the 1007 or 1025 is using long-term rents on that, right? So it is, it can't be listed vacant. So when you order the appraisal on that, we're going to use the 1007 for long-term rents for that qualification. Or we could look at income documentation, right? So I can get the 12-month history of this Airbnb, use whatever income, in their self-employed, go bank statements on the on their self-employment income, and look at Airbnb and do a net rents. That could work. So I'm saying we're here to help you solution these loans for you, right? So when you're talking to an AE, and hopefully you have one, if not, reach out to me and I'll get one assigned to you. There's ways to look at these loans and maybe other documentation that makes sense to help you close that loan. So I'm looking at that one. I got someone that lives and works in a different town, maybe rents there, has a rental, rents it out Airbnb. I probably have enough income to add 50 DTI to make that work, given the net rent calculation we use.
Great, thanks, David. Next question. Do you have any programs that would allow a non-occupant buyer on a property in the $60,000 range qualify on bank statements or assets?
Probably not. That's just too small of a loan amount for us. That just doesn't trade well out there in the market. Again, Home Express, we're a true non-QM lender. We underwrite our own guidelines for our money, but ultimately they get aggregated at some point into the securitization market, right? And so when you look at some of these loan sides, it's difficult to do that, right? So it needs to be $100,000 or thereabouts and greater for us to get that transaction done.
Thank you. Next question. I thought for DSCR, we can go off appraisal average rent.
You can. Absolutely. You can go with a 1007 if it's a SFR, 1025 if it's unit, 1050 if it's 5 to 8, right? And there's some things on that on the commercial side you need to look at, right? You can use those. You can also use actual rents. And I had some examples here or scenarios where they're bringing up about renting out short-term rentals and how to get those done. So I just wanted to address that because this was more on DSCR, but this question came up, how do I structure this loan, right? I have an Airbnb, live somewhere else. How can I use all of that income versus long-term rents? And I'm trying to give some examples because we get these done all the time. They provide 12-month proof of the receipts from the short-term rental, Verbo, Airbnb. We use their income. We'll do a net rent calculation. Like we just use a 20% expense vacancy factor if it's an income file. And those usually really work on the DTI. And so get those closed. So you're right. We can just use the 1007 or 1025 on a DSCR. We also have income availability for our business purpose loan. So I'm not trying to kind of intersect those in there well. And that's when you see when the DSCR doesn't work on a refinance, there might be ways on the income doc or alternative income doc and ways we can structure that to get your loan closed.
Great, thanks, David. Next question. Can the seller pay more than 2% closing costs for DSCR?
I think we have up to 3, so I believe that's 3.
Are collections required to be paid?
Depends, right? So we have some guidelines on these are rule specific. So it's anything that's within the reporting with the last 2 years, absolutely we need to look at those. Or if they're medical, we could probably look at that. If the date of last activity is a while ago, probably not, right? And again, you're looking at what's the dollar amount. If it's $500,000 in collections that are from 3 years ago, that's going to be a little difficult. But generally, we go back 2 years on collections. Hopefully, they're not big, and hey, not a big deal, right? Especially if they're medical or something in the past, they're not collecting on it. So you look at the DLA, which is date of last activity on that credit report. And again, these are things that I would love for you to send up to me or send to your account executive, and we can review those, let you know if they need to be paid off or not.
Great, thanks, David. Next scenario. A client has 10 investment properties and has annual leases on each property. With the receipt of the lease payments, would the payments of the PITA be a wash on these properties?
Yeah, again, if it's doing the DSCR, and if you're doing it that way, which I recommend with 10 properties, right? It's underwriters do not like you going on an income doc file on that. So yeah, you could provide the lease agreement, 2 months proof of each property, right? And we use a 1-to-1. There's no expense or vacancy factor taken into account on the DSCR. So it's 1-to-1. So here's my rent, $2,000, my PITIA, or interest, taxes, whatever they do if they want interest only. It's 1 or better, you're in for the max LTV, and then pricing everything based on the credit profile and FICO score of the borrower. So absolutely. Now, if you're doing DSCR, that's different than an income file. Income file, then you have an expense vacancy factor that you take into your net rents.
Great, thanks. Next question. Do you have a needs list?
Needs list, as far as what we need to submit a loan? Absolutely. And get with your account exec. If you don't have one, contact me. My number and my email address is going to be on this, and I'll send you up. Well, hey, this is what we need, and it's a really small list, right?
Yeah.
I mean, we it's very small. You know,
Yeah.
it's 3 or 4 things we need. Borrower's authorization for one, right? We just use your MISMO file. We really don't even need the 1003 sent over, and just go over the deal with you and kind of register that loan to get that submitted. It can be done within today, right now. You could send over, here's what I need, boom, you could submit that loan today and get it locked in, which I do today. I mean, I'm looking at the rates today, the bond market. Today would be a good day to register and lock your loan.
Very good. Next question. Is the down payment for Foreign National the same?
Foreign National has a reduced loan to value that we have on it. So it would be greater on a Foreign National as far as the down payment. We're looking at 70% on a Foreign National on a purchase. So yes, it's 30% down on Foreign National. Now, when you look at Foreign National, I'm gonna get into education. What does Foreign National mean? Foreign National means it's not a US citizen. That is it. When we look at it on a DSCR, when we're saying Foreign National, that means I have a borrower that lives and works outside the United States and is not a US citizen. So that's not saying it's a green card holder or a non-permanent resident alien, that's a visa here. So I'm talking about Foreign National. It's a little bit more in a bucket on these, where you might have someone living in a different country. They want to, hey, what are you going to do with your money if you live in some of these countries? I would love to have American real estate. Perfect. However, just going through that, there's a kind of a list of things we need on that, the passport, right? We don't even need US credit on those, but we do require 30% down on that purchase.
Great. David, this is an investor related question. Are there any investors that scale these products because the barrier of entry requires 20 to 25% down? What are investors doing to get more, pay off the note, and get pure profit from the tenant?
This is for like the landlord, that's right. So how does the landlord make more money? Or are you talking about the aggregators or the securitizers in the market? Kind of a vague on that.
Yeah.
Maybe. Again,
going
as
to
in
say.
line, I mean, the experienced investor into non-owner occupied kind of knows the market where they're at and has a strategy for what the rents are and for long term. So I think they know the market probably better on this non-owner occ, and they can talk to property managers and stuff like that. They're a little inexperienced. Maybe if they're inexperienced, they have somebody, a friend or somebody that can help them out with that is more experienced in the tenant landlord type of relationship and pricing that out. If you're looking at aggregators, I mean, vested interest means a lot, right? And this is the difference between 07, 08, and I'm not going to say the words, kind of stuff like that happen, is that you will see that in the non-QM world, there is vested interest, right? Credit profiles look good. They're putting money down, and these loans perform very well. And so as far as our investors, ultimately the aggregators and securitizers feel real comfortable on this product going forward. And as far as the landlord goes, I mean, give them the best advice you can. If someone's just jumping into it, make sure it's, they're aware of kind of the pitfalls of it, what can happen, right? What if they don't pay rent? Do you have a system of, hey, I got to pull credit. I got to look at past history, just like you do or we do on an applicant coming in. How do they pay housing? That's the biggest indicator to me in how I lend, right? What was their housing payment? Can you validate that? That's a reasonable test that they're going to be able to pay it going forward.
Great, thanks, David. Next question. Is there a product for a renovation / DSCR program?
Man, I wish we did. We've talked about that. Man, that's a kind of accounting nightmare. If we could probably get that done, we'd have a lot, right? But no, we got to lend as is right now, so we don't have that. That's more for some other lenders that do that. We do not have that product available in the DSCR.
Thanks, David. Next question. Is there a maximum origination fee?
5%. There is 5% of the loan balance.
Great, thank you. Next question. Do you know of any other programs that we can do in other states without having a license in that state?
It's got to be business purpose. I love that question. I wish, right? Hey, here's what you do. You sit down and get licensed in that other state, right? That might be an angle, right? And I know a lot of friends of mine, brokers, they're licensed in 5 to 8 states just for that marketing of it, right? So they can go to certain areas that might, if you're stuck in one area, and this is why it's good on this DSCR, you're subject to local things that happen to you, right? Just stuff out there. But if you expand and diversify in other areas, they might have a little more flexibility. You can kind of even out the ups and downs of the business cycle.
Great, thanks. This one seems to be maybe like a clarifying statement. I was under the impression that DTI is not a considered event for DSCR.
You are correct. I'm talking about DSCR. There is no DTI calculated. The only thing we're calculating is the cash flow of that property. That's the gross rents divided by the PITIA or ITIA. That is it. Some of these scenarios that came in, I would recommend exploring a DTI file, which is available.
Thanks, David. Next question. Can we offer temporary buy downs on DSCR?
Not temporary. You can buy it down, but it's not temporary. It will be bought down for that interest rate.
Okay, great. And it looks like we have just about 5 more minutes, and I think there's just a couple more questions. I know some people are saying they have to drop off. So yes, everybody, you will receive David's cell phone. So David, get ready.
Yeah, hey,
email your cell phone.
I'm a loan person. I love loans. I hate my title. I'm here to do loans. Help borrowers out, man. I'm here to help. I'm here to help.
Okay, great. So everyone who is on the call, thank you so much for your participation. I think this has been the best group to ask questions. So we really appreciate it. If we didn't get to your question, we will send you an email afterwards. And yes, you will all get David's contact information here. So I'm going to turn it over to Ray Menina to kind of wrap it up here in the next couple of slides.
Yes, thank you very much. And these were some excellent questions. So hopefully you guys have a better understanding of how the DSCR programs work. Just to add to the question of how do we capture more business in other states? Well, we do have for our approved brokers white label marketing material. So these can help you in sending out marketing material to your borrowers, to any referral sources. And if you don't have any, or if we don't have something that that you need, or you want something customized, your account executive can certainly work on getting you a customized white label marketing piece as well. Okay, so thank you, David, and I hope everyone again has a better understanding of non-QM loans, and more importantly, the behind the scenes look at DSCR loans, the way the underwriters look at them. As mentioned earlier, these webinars occur monthly, so feel free to join us each month and invite any colleagues you think can benefit from these information sessions. Our next webinar will be presented on November 11th, and the topic will be the Home Express story, keeping programs while honoring locks. And this will tell you a little bit how we've evolved into being the trusted lender for many of our brokers in regards to non-QM loans, and how we've received this reputation of, again, doing what we say we're going to do and being there for you, not abandoning you. I'd like to thank our loyal customers who continue to use Home Express as our primary non-QM lender, and we humbly invite those who are not currently partnering with us to join. To learn more about Home Express or to view a previously recorded webinar, you can always visit our website at www.homexmortgage.com. And I believe the next slide will have David's contact information as well as mine. So feel free to reach out to him. He can certainly put you in touch with an account executive in your area. This was a great webinar. We thank you for attending. And yes, have a great day.
Thank you, Ray. Thank you, David Grider, for, again, your time today. Thank you, everybody on the call, for your time. We know your time is valuable. Thanks for sharing it with us. We will send you a copy of this PowerPoint as well as the recording in the next day or so, so please be on the lookout for that. Thank you, everyone, so much. Have a great day, and we will see you next month. Bye-bye.